If you've been searching for high-yield investment properties and getting frustrated by all the generic advice about just buy for the cash flow, this video will show you exactly where the real opportunities are right now. I'm Gilbert, founder of SuburbsFinder, and I just analyzed rental yields across 15,000 suburbs in Australia to find the locations delivering exceptional returns while still showing genuine growth potential. Most investors think you have to choose between yield and growth. The data tells a different story. In the next few minutes, I'm going to reveal 14 specific suburbs across Australia where you can get yields above 5.5%, some over 12%, while the fundamentals suggest these aren't just yield traps. I'll show you the exact data that proves these suburbs have both strong rental demand and early signs of capital appreciation. Before I reveal what those suburbs are, let me explain how I found them. I use a 3-step filtering process when I'm hunting for genuine high-yield opportunities. First, yield gate. I start with suburbs delivering gross yields of at least 5.5% in capital cities and 6% in regional areas. Anything below that just doesn't make sense in today's interest rate environment. Second, tight rental market. I need vacancy rates under 1%. High yields mean nothing if you can't keep tenants. Third, growth momentum. This is the key. I'm looking for suburbs where either prices or rents have been moving upward over the past 12 months. I want yield and growth potential, not just yield. When I ran this analysis across Australia, 14 suburbs stood out immediately. And I'm going to take you through them state by state, starting with the most surprising results. Let's start with New South Wales, where I found 3 high-yield suburbs that caught my attention. The first one is West Wyalong, which delivers a rental yield of 7.03%. Properties are renting for $500 per week. And when you see a vacancy rate of 0, it tells you that tenants are clearly competing for rentals. What's particularly interesting about West Wyalong is what's happening with the rental growth. Rents have increased by 2.46% over the past year, but prices actually dropped by 1.26%. What this creates is yield expansion. You're getting more rental income relative to what you're paying for the property. Moving on to Deniliquin, which is showing a completely different pattern. The yield sits at 6.03%. But what I like here is that you're getting both price growth of 3.76% and a rent growth of 5.26%. That's really the sweet spot you want to see. Yields holding strong while both sides of the equation are moving upwards. The third NSW suburb is Narrabri, which rounds out the state with a 6.15 yield. What appeals to me about Narrabri is the balance it offers. You've got 9.41% price growth combined with 10% rent growth. It's not explosive growth, but shows consistent momentum across both metrics. Moving down to Victoria, I found 2 standouts that prove you don't need to go to the middle of nowhere to find decent yields. Stawell is delivering a 5.98% yield with some impressive fundamentals backing it up. The price growth sits at 10.48%, while rent growth is at 5.26%. Properties are also selling fast, which tells you there's genuine buyer interest despite it being a regional location. The real surprise in Victoria is Merbein. The yield comes in at 5.81%, but when you look at the growth numbers, they're quite remarkable. Price growth has hit 36%, while rent growth reached 35.71% over the past year. Those are the kind of numbers that suggest a market in transition. Moving north to Queensland, this state delivered the highest yield on my entire list, and the numbers are pretty compelling when you dig into them. Collinsville tops the list with a 12.34 yield. Now, I know that sounds too good to be true, but when you combine that with 13.64% price growth and 21.92% rent growth, this clearly isn't a declining market that's artificially popping up yield. Mount Morgan comes in with a 7.85 yield and shows 25.25 price growth. What's encouraging is that properties are selling in just under 38 days, which suggests there's strong buyer demand despite the regional location. Ingham rounds out Queensland with a 7.77% yield. The rental fundamentals here are particularly solid. You've got a 0.33% vacancy rate combined with a 13.51 rent growth. That combination tells you it's a tight market with rising rents. Next up, it's South Australia, which really surprised me with some exceptional opportunities that most investors haven't discovered yet. Port Pirie West is delivering an 8.34 yield with some remarkable fundamentals supporting it. Price growth sits at 21.98, while rent growth has reached 10.61. Properties are selling fast, and there's only half a month's worth of stock on market. When you see numbers like that, it indicates a tight market on both sales and rental sides. Bordertown offers a 6.72 yield with 9.74 price growth backing it up. The rental market is tight with a 0.93 vacancy rate, and properties are moving quickly at under 30 days on market. Port Pirie South completes the South Australian trio with a 6.35 yield. What really caught my attention here was the 30.37 price growth combined with less than a month's worth of stock on market. When you see stock levels that low, it indicates serious supply constraints. Finally, we get to WA, and this is where the highest yields meet the strongest growth momentum. Wajin leads the pack with an 8.07 yield, but the growth story behind it is incredible. Price growth has reached 7.41%, while rent growth hit 32.35. Properties are selling in just under 16 days, with only half of month's worth of stock available. When you see metrics like this, it tells you this is a market under serious pressure. Meriden offers a 6.99 yield with 52.56 price growth supporting it. Even with that level of growth, yields are still holding above 7%, which suggests that rental demand is keeping pace with the price appreciation. Narrogin rounds out WA with a 7.15 yield. The fundamentals here are exceptional. You've got 23.08 price growth, 12.82 rent growth, and properties selling in just under 13 days. Those numbers indicate a market with real momentum behind it. So, there are your 14 suburbs. But here's the strategic question you need to ask yourself. Are you looking for maximum yield right now? Or are you looking for yield with growth potential? If you want maximum yield, Collinsville at 12.20 is hard to ignore. But you need to be comfortable with Queensland mining exposure. If you want yield with growth momentum, the WA suburbs like Wajin and Narrogin are showing both exceptional yields and strong capital appreciation. If you want yield with stability, the NSW options like Deniliquin offers solid returns without the volatility of mining-dependent economies. Now, keep in mind that high-yield markets can change quickly. A suburb delivering 8% yield today might be down to 6% in 6 months if prices run ahead of rents. This is exactly why I developed SuburbsFinder. It's not just about finding today's opportunities. It's about monitoring how these metrics change month by month. You can set up alerts for when the yields hit your target thresholds, track vacancy rate trends, and spot emerging high-yield markets before they appear on anyone else's radar. The platform covers every one of these 14 suburbs I mentioned, plus thousands of others. With data updated monthly, you can filter specifically for high-yield opportunities, set minimum vacancy requirements, and even track which direction rents and prices are trending. I've arranged a free trial through the link in the description below. It'll give you complete access to dive deeper into these high-yield suburbs, plus the ability to discover similar opportunities that might be emerging in areas I haven't covered yet. See you over there!